Alrighty guys, welcome back to the live stream here. I hope you guys are all having a great and amazing day today. I want to jump on and we're going to just kind of go through what has been happening in the stock market today. We're going to break down some key things, so I hope you guys all enjoyed the video. If you have any questions, let me know down in the comments here. Let me just kind of move some stuff around so you guys can see me. You guys can see the live stream. All right, so looking at stock number one here, you'll notice Roblox today. If we go to the 10-minute chart, you'll notice that this stock is pretty much. Oh, man, let me see if I can find a better. Maybe we might go there for my webcam. All right, so you'll notice the stock here went from about $32 all the way to $26, and a couple days ago was trading for about $35. And this is hey Kevin, hey Lindsay. But we're looking at here Roblox. So the stock has fallen from $32 all the way to about $26 today. And this is because of their daily active users has fallen by 9%. So came out with some sort of fundamental catalyst stating that the company's not bringing in as much revenue, as much users, and obviously with that you're going to have sell-off, especially with a company like Roblox, because that's how they make money is off their users. And another stock here, there's so much sell-off today. If we go ahead and you guys just look at the market, you'll notice we've gotten absolutely annihilated by pretty much everything. You know, another company, Netflix, is down. We've seen this thing stair step, and look at this. Look at the S&P 500, SPX. Today, the S&P 500 fell about, I think it was 800 points. You'll notice, like, look at this stair step down. Just hit 4,100, and within a couple of days, this thing is trading for $3,800. We've seen a lot of sell off. The Fed has increased some rates, which is, it's not a bad thing, but it's not a good thing in the short term because it's going to slow the economy down, and with that, you're going to have some market sell-off. Increasing rates will prevent spending because people aren't going to take out loans for houses or cars, and you're going to have companies like Ford, Tesla. You'll have real estate companies start selling off because people can't afford the interest on it, right? A house that was $400,000, 2 years ago had a monthly payment of $1,400. Now it's like $2,500. So it's a crazy world we're in right now. But yeah, so let's just kind of go through some stocks here. We've seen a lot of sell-off today, but a stock that I've been looking at and I actually bought was Rumble. I bought in here on there is some pretty hard support rate here, near and around $7.38. You'll notice we've hit it twice. We've seen just some buying pressure actually kind of stepping in, and it's crazy because normally in conditions like this, we'll see these growth stocks like Rumble, DWAC, Tesla, Google, these companies just fall more because growth stocks are companies that are more volatile, more risky, go up and down. And today with how much the market's fallen, and a company like Rumble only fell a little bit, that's a good sign. I think we'll see a little bit of some buying pressure stepping in here. So I'm pretty excited. I'm up, I think, a little bit on this. Yeah, I'm up 2%, only $10, but we'll see what happens with this. My goal is to see this thing push back to 10. Who knows? Who knows with this one here. But another one here, we can go ahead, Netflix. Netflix is down 8%, a whopping 8%. And for Netflix, this is a pretty decent move, but what we've seen Netflix over the past couple of years, really, it's slowly turning into a value company, a value stock. And the reason why I say that is because Netflix has pretty much hit their peak users. Companies will eventually max out. And that's kind of what Netflix has seen. Not to mention, there is more and more competitors in the streaming space every single day. We have Disney Plus, Hulu, HBO, and like 1,000 other monthly subscriptions. So now, as investors, it's hard to judge, right? Because you'll have so many options that it's hard to pick and choose. As consumers, it's awesome because one, everybody's competing with each other to make the best content. Everybody's trying to be the most affordable. So it's a perfect world for consumers. Investors, it's very, very hard to judge. Do you invest in Netflix or do you invest in Disney? Disney has the parks and the streaming services. Or do you invest in Netflix, which is the largest, subscription-based company pretty much that's ever walked the planet. So very, very hard to judge. But looking at it, you'll notice here we've seen some sell-off from 800 all the way to 300. But before, it was trading for about $162 a share, which is a very, very that's a pretty decent sell-off for this stock here. So this one here, you'll notice here we've gotten some more sell-off today. Same thing, very volatile. And this is just because of these reports coming out of these companies here. And guys, make sure if you guys have any questions or if you guys want me to look at any stocks, make sure you guys, go ahead and throw it in the comments here. And make sure you guys if you guys want me to do more live streams, make sure you guys subscribe. You guys know what to do. It really, really helps me out when you guys do that. But you'll notice we've seen a lot of companies, right? Look at these top gainers. And this is why a lot of people are drawn to day trading is because of these companies. Let me tell you guys, it's very, very risky to invest into these high volatile stocks that go up and down at very rapid rates. It's very hard to judge. So if you're a beginner, just take a step back when you're looking at this and just kind of look at, these major news, and you guys can look at earnings releases. So we do have some earnings, coming up here today. So I'm pretty excited about that. We got Adobe, which is hopefully gonna step up and do something nice, but we'll see here. But there is some companies right on some support lines, which always brings some opportunity. Pets.com, GASS here near support. So there is a lot of opportunity out there as of right now. But yeah, guys, some other companies here that I'm looking at here is we've gotten some stair step back down to for Apple. Apple has slowly gone from 150 all the way to 136. For me, I think I'm going to wait until Apple is probably near and around this $120 mark before I hop in on it. Hopefully right near and around here, right around that zone. Just because we've pretty much seen this thing slowly start breaking down. It's going to be one of these plays where, yes, we could get some support here. And try to use that as some buying pressure. It's done it in the past, but I just think right now in the market condition we're in with the volatility, with the rates, and what about Lowe's? We'll look at Lowe's here in a second, but Apple here, I'm gonna try to get in near and around this 120 mark. So Lowe's, we can go ahead and pull it up. What ticker's Lowe's? L. Not even sure what the ticker. Oh, right here. LO. All right. So Lowe's for me Lowe's is a good company, good stock. It's more of a value stock rather than a growth stock. And I'll do an airline stock here next. So make sure after Lowe's we'll do airlines. So Lowe's for me is a company that does well in bull markets, bear markets. It's just more of a value pick for me. It does carry a lot of potential. The company brings in heavy money, $23.4 billion plus a dividend every quarter. You can't go wrong with it. But if you're looking to perform well or buy in on stocks that are not more affordable, but if you're going to invest into companies, for me, I guess you have two options or three options. You can invest into growth stocks. You can invest into value companies, and that's where I'd put Lowe's, company that does well, not going under anytime soon. And three, we have almost these high risk, high reward plays. And Lowe's is just a value company. It's going to be around for a while. The only major competitor with Lowe's is Home Depot. I do think Home Depot is the better pick. They have better finances. They have better dividends. They have better growth. They have more money in cash. They're a better option. But if you're going to invest in Lowe's, I think good strategy, dollar cost average it. Invest weekly, monthly into this. Keep it under probably 2-3% of your portfolio size. And yeah, I think it's a great option. If I'm going to invest heavy, like a one lump sum, try to get it near and around this 180 to 168. So, all right. Airline stocks. I think the number one airline stock for me is Delta. Delta is a company that actually has relatively good financials, right? They bring in a lot of money. You'll notice we've seen some sell-off from the 2023 crash, or not 2020 crash from 62 all the way to $17 a share. In this, you'll notice here the company continues to bring in a lot of money. They brought in 13.8 billion, then they brought in 13.9. So we do have increasing, revenues here. They actually care about their planes, their customers. And you'll notice here, yes, we've gotten some sell-off. But if you're going to go the airlines route, I think the best option would be to do Delta. Or there is an ETF, I believe it's called JETS, JETS. And this one here, it pretty much tracks, U.S. Global Jets. This one here tracks the pretty much the best airline companies. So if we go ahead, Jets Holdings here, I searched it up. So this one here, the companies in here, Southwest, Delta, American, United, SkyWest. So all these fantastic companies that if you just want to invest into the airline sector, this would be the route I would take. And the reason why is because you're going to have less volatility with it. You're pretty much just generalizing investing in the sector rather than these individual stocks. Individual stocks is very, very hard to judge, especially with airlines and travel companies, because they can sell off. I think we all know, right, during all these lockdowns, these companies pretty much sold off, from $32 to $10 in like 3 or 4 days, just like crazy amounts of sell-off. And it hasn't even recovered from that. But this would be the route I would go because we have all the good ones, Southwest, Delta, which are the top two, American, which is okay, United, which is okay, Alaskan, okay, but they also will have other companies like bookings.com, TripAdvisor, all these other ones that, yes, you can invest, you can make money off them as well, just travel in general. But this would be the route I would go here. And I believe Boeing's in here too somewhere. I think I missed it, but Boeing right here. Boeing's in here, so you're investing in pretty much all the major airplanes. It's a good company. Good ETF. This would be the route I would go. But yeah, so guys, I hope you guys all enjoyed the live stream. We're going to try to go on, maybe every other day or so and see what's going on in the stock market. But that is it. I hope you guys enjoyed the video. If you guys did, hit the like button, subscribe, and we will see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.